Okay, right now, this is the continuation of our strategy, everything we've been doing, everything I've basically been doing, just continuing and showing exactly what I mean when I say liquidity, what I mean when I say divergence, what I mean when I say key levels, etc. Right? So we'll take Nasdaq right now. I'm in the 3-minute. I look in the hour. We see Nasdaq rose from here to here this morning, right? We'll see we're in a divergence on, where was it? So we'll have a 1 hour divergence, right? So from here to here, it's going up, yet from here is going down. And that means that trend is reversing and the minimum is here. But then you can go on the even, you can go on the daily, and you can say from here, where was it? I had it drawn out. You go on the daily and say, this is the daily. Wait, let me find it. Where was it? Trend. I took a picture. Okay. So on the daily, we can go from down here. Sorry, it was way further. From down here to here. So from down here to here, price is going up, right? And upwards. Let's get rid of this for right now. And upwards momentum. Okay. And they're connected. This is lower, this is higher. Remember that. Go down. We'll call this level right here. Here to here. Now you're gonna say, hey, Choco, these are like, hey, this is 0.05 microns closer. Like, this is really higher. This is going up at an angle. Cool. I'm calling it here. Okay. I'm calling that price is gonna rise and reach minimum here, back to ATH, all-time high. Okay. Just because the divergence is so close, we can go in the 4-hour and get bigger pictures. Let me change to the left. Get better pictures. Look, there we have it. Here is lower. From here to here is going up. From here is going down. And what does that mean? Trend reversal. So we can say forget this one. We go to the closest one, which is, can I select it from here to here, which is down. So this is in 4 hours. So these are this was in Tuesday, the 9th of June, sorry. And this is yesterday. Okay? Or the other day. No, I think it was yesterday. No. 29th. Anyways, you're going from the top down, right? Now you find the same point. We'll go from here because it's actually right here. Right there. Find the same down point from here to here. What's the price doing? It's going up, right? Yet, sorry, I'll get rid of this one. It's going up, yet it's going down. Well, if you remember what the divergence is, if price is going down on the bottom, but on the top it's going up, that means it's a bullish divergence and you're going to reverse price and go up. So after this point, we reverse and we go up to the highest point, which is here. Highest point is here, 30,900, which is 2,000 ticks away, right? We'll say 1,800, just give us a cushion. So that's a lot of money that can be made going up, okay? So that's our top down. So we know from the top down price overall, we're gonna have drops. If we have a little drop here, that was our only drop today, a little tiny drop here, we're gonna have a little bit of drops, but everything we're getting high pushes for the most part, unless, you know, DC gets bombed or something, I don't know, something crazy. But for the most part, market has showed that it's ready to push us back to all-time highs, okay? So and if you're curious, what's this left thing? This just makes this literally just makes price go up. I mean, like, it expands it for you. And I do the same here. So I could see, like, if I'm looking like this, I can't really see the difference as well as I do like this. And then scroll left and right. I also put my stop wheel, what is it called? Your wheel for your key mouse. I'm rolling it forward and it makes it like that. Zooms it in. I pull back to zoom it out, okay? If you guys are new to trading view. So we have that, right? So now we're going to look at levels. This is basically what we're doing. Market just opened back in. We're looking at levels of liquidity, levels of resistance, where it should be striving for, this and that, right? So we have basically a double top right here. So I will put this in here, and I'm just doing that because price went up here, dropped, went up here, and it reversed. It went on this big long drop, and this is just a pullback on the overall bearish. Look, we have 1 touch, 2 touch, 3 touch, bearish drop. So we're just looking at levels that we want price to get to, and levels that, you know, price might fight at because it's resistance and support. So what is resistance? What is support? What is liquidity? I can explain it to you right now. I'll do a paper trade. So say I think price is gonna, actually let's see if we can find a divergence really fast, right? When 3 minute, price goes from here to here, which is down, accurate, here to here, accurate, right, here to here, here to here, it's up, okay, then it goes down, look at the bottoms, it's lower, lower, higher. None that I can see right now. Go on the 5 minute. None that I can see right now as well. I'll go to 1 minute. None that I can see right now, right? So say I'll just stay in the 3 minute just so it's a little bit bigger for you guys, and I'll just do a trade. And I'll say, you know what, price is gonna break through here. So I'll put my take profit there. Say I want to trade 5 units. Where am I? 2 units, sorry. And I'll put my stop loss down here. Very bad trade because I'm risking $286 to make 115. That's terrible. But say I seen the divergence, I'll put it here. I risk 9 to make 115. It's still almost 1-to-1, but better than, you know, the other one, right? So I put my limit. This is where I want price, so I can draw this anywhere. Once price hits this point, it'll put me in. Oh my god, let me get off of delete and just go to this one. And I'm just gonna reset and give myself money. How do I do that again? Futures reset. Okay, I'm $100,000, and say I'm just on futures, so don't think about the money. I'm buying in. Crap. I'm closing real quick. I'm gonna buy in, take profit here, stop loss down here, okay, and I'm gonna buy. So as you notice, it doesn't show it on this one either. This is what you would see. This would be called, I'm gonna show you guys on my real account, okay? Just hope I don't lose money. Let me wait till I can actually show you the terminology they use, and that will really help you concretely understand. So let me see if I can find a divergence really fast. I don't just lose my money. It's down here, or 6 o'clock. Right here. Okay, I'm gonna close. Claims my trade rate. Okay. No money, don't judge, right? Take profit up here. Stop loss right here. And do I buy? Do I sell? I'm buying. Alright. One contract in. So you see, I can print this down. This says sell limit. Yeah, this says sell stop. And you're gonna say, okay, what does that have to do with anything? So say this is a key level, right? Everybody knows, based off everybody's technical analysis, that this level, this is all, I'm not saying this level is a key level. We're going to say that this level is somewhere that price should not drop to. So what I'm going to do, because I entered a price, I'm going to put my stop loss right below it. Okay, so even if price drops down here and this becomes support for a price to bounce up, as long as it doesn't go under, if it goes under, it signifies that sellers, or that buyers are winning and sellers, buyers aren't winning anymore and sellers are winning. So say we want price to do this, right? We want price to go up here, boom, and explode, right? We want this to be a level of support for the buy. But if price goes down, right, goes down, goes up a little bit, and goes down here, what it does, this sell stop takes out my trade, so I no longer am losing any money, but I'm also like I'm out of the trade. Yet, and I do this because this is a key level, so I'm thinking, hey, if price reaches here, we're no longer in the buy. This isn't going to be a rebound. I'm just going to be losing money, so I take my money out, right? And then it's the same for this. I know this is a key level, and I want this is my prediction, so I do my calculations of my risk to reward ratio, and I decided that I want, when price reaches at this point, I want price to take me out. I want to sell all of my buy positions, and that gets me my money. So if this is a big key level, this is a tiny level, so there's no quote unquote key level right here, right? If this is a big key level, there's a bunch of people doing the opposite. So watch when I go into the sell order, okay, say I'm doing a sell order at the same time, right? I put my stop loss right above here, and I'd put my take profit down here. And you'll say, why? I do that because when the buyers buy in, and they know buyers get the price and they bring it all the way up here, and they know at this level price is most likely to reverse because everybody, this is a good level, we made our money, so we're going to sell. Sellers love this, right? Sellers would put their money here. All this money would be called, like, so the price would go up, right? Shoot, I need the arrow. I use this one. Price will go up, take all that money, come down, and it might go down further. It might rebound. It's all dependent on what, but this is just to show you what a key level is and how price changes. So this is what we call liquidity sweeps, because I'm going to show you exactly one. I'm going to show you one this morning, actually. So, for example, this was yesterday morning. Yesterday, market open. So you see market is going like this, like it's moving up and down. You know, it's calm, right? So it hits this point. Price goes from here and it drops all the way down here. You might say, hey, what's down here? People were thinking that price is going to keep dropping, okay? People are going to think that price is going to keep dropping. So if you want a big move, right, and you only have 30 positions. So imagine this is only 30, imagine those are 30 positions, and down here there's another 30 positions, and you want to move 60 positions total. You're going to have to get that somewhere. So price moved down, took all of these people who thought, hey, price is going to stop here, and all these buyers who put their stop losses down here, they were stopped out. So you see this long wick, price dropped here for a second, it took all of their money, and then it used that money, the institutions used the millions and billions they just gained in that quick little drop overnight, because key levels right here, people are thinking, hey, there's a gap, it's going to come down here, and there's all type of other ICT terms, but in simple words, people are thinking, hey, price is going to go down, it's going to keep going down, I have my stop losses, I have my set limits or whatever, and it grabs that liquidity and it pushes, and it pushes, and that's divergence also was helping it push. But dang, I started losing my trade to explain to you. But that's like a quick little example of how we use liquidity and key levels and like exactly what it means, because everybody's doing this. You don't want to enter a trade and not have a stop loss. And because everybody's looking at the same charts, everybody knows, say if I'm entering a chart on the hourly, I look for untapped. This is what I do. If I'm buying, right? Say I started buying right here. I'm saying, hey, this level right here has not been tapped in a while. So I could say, I'm going to put my stop losses to buy. So I'm going to say if price goes under this level, I'm going to sell because I'm going to take my positions out because I don't want to lose any money. And I buy in here, right? And I keep going and I look for other areas that haven't been touched. Liquidity is like a magnet because everybody knows money's here. So if sellers are winning, they want to bring price down to here because everybody has their stop losses here, which makes price sell even more, right? And it's the same for the upside. That's why I do this level. This hasn't been tapped. I mean, it's not a strong level. We'd find like all-time highs are super strong levels of liquidity, right? Are places that have not been tapped. So we say, let's just say this hit a cliff and it went down. This would be the level of liquidity because it's a strong level. Like think of it back to the basics. We have our charts, right? And each of these are levels. Levels here, levels here. Dang, can I stay in the trade? Golly. I mean, that's the thing. Right here, right here, right here, right? These are levels. Doesn't mean these levels are significant, but these are all technically levels where price can be at. So if price, this is the all-time high, right? And price ends up going here, right? This could have been a level where people who wanted the price to go up, we knew that we went up, we had a higher high. So when we bought in, I'm gonna do it right here. We bought in, we put our take profit here. We bought in right there. Say we bought in a little bit higher. We put our stop loss just under this level. We know if we buy in, we have a limit buy. We take our profit out here. So when we go here, it sold. So you see what happens? It went down. And say sellers overtook somehow. And we know all of these, or even if it didn't hit, we know all of these sell orders are still resting here, especially if this doesn't get touched for a while. Money just sits at key levels, and there's levels where there's massive amounts of money, and there's levels where there's just a little bit amount of money. And it's up to you to decide where. Like there's liquidity, and it's not just side. Like you see this trend line. This trend line on the other side of this trend line is liquidity, right? So if I'm a seller and I know that price is going down, I'm gonna put my stop loss right here. Why is this magnet so strong? I'm gonna put my stop loss right here. Do you follow me? And why I'm putting my magnet here, I mean my stop loss right here, and I'm gonna draw a box. So once it hits this point or this line, I'm out. I know, okay, price drop down, boom. I sell right here, I buy back in, price goes up. It drops down. If I'm a seller, I'm gonna put my short in, which is I make money when it goes down, and I make this big amount of money here. I might buy in here, make this big amount of money, it keeps going higher, and I'll sell here, goes down, repeat, right? You notice you're a seller, you say, hey, these levels are not being tapped because we're in a bullish market. Even though we're getting pullback, up here, there's so much money from people resting their stop losses. So if you're a seller, there's buying stop losses up here, buying stop losses everywhere, right? Everywhere. And obviously the losses up here are gone, loss up here, and it travels down until like, because this is current, so there's a bunch up here, or there might be a bunch up here, right? these are also levels of resistance, levels of liquidity, that there's money lying in these areas. Because if say we go on this one, right, we broke through and we finally broke this bearish structure, these sellers expect for it to hit this peak and see, okay, it's on this line, to go down, right? And they have their stop losses right here, so they minimize, but they have a bunch of money. They're still, say they have 50 million in a $50 million worth of positions, and their stop losses is just 2 million worth of position or something, and they're trying to make the money going down. That's still 2 million of one person, and say that's times 50 or whatever. There's millions of dollars sitting above here, because they know if it goes above here, price is in a change of structure, and it should go up further. So that's why you use stop losses. That's why you use take profits. Stop losses and liquidity, that's how they all come from. It's like, it's essentially where we're hiding our money. And yeah, where we're hiding our money and where the money lies indicates where price goes to be. And yeah, price always, like liquidity and money, acts as a magnet for people and price. The market wants to get money. Always. The market always wants to have money. So makes this position, I don't know. Market always wants to have money. And yeah, that was the divergence. We saw a little, I'll show you a divergence here. There's from here to here, there's none. Shoot, I have an indicator actually that I made, but I don't want you guys to look. I won't use it then. Okay, I won't use it. I'll go from here, from here to here. I don't see any divergences at the moment. Price is, like, this is 624. Price is not really doing much because the market isn't open. I mean, the market's open, but there's no sessions. So there's not a lot of volume in the market. So it's just orders, a little bit of orders. So price is just, moving a little bit, but overall, it's going up. Yeah, hopefully that explained a lot that was missing if you didn't understand that point. Yeah, not really much to it. Or a B is just another level of quote unquote support. The ORB method could be another, like this could be for the buyers, this is support. Well, this would turn into support. This is support event initially. This is resistance initially. It breaks through resistance, goes up, retest for support, and it goes up higher. Repeat, repeat, repeat. And yeah, divergences. Price goes up. What does price do? Goes up. And oh, price is going up. Look at that. I didn't even notice. Yeah. Anyways, that's it.